welcome back to Golden Roll Radio. We enjoyed the State of the Union last night, and we're going to give you our own version of a State of the Union in the metals market. We have gold from last week down about $15. We said last week to be buying on weakness. Well, we have a little bit of it. Today, the Fed announced no interest rate change, and the dollar is reacting accordingly. It's flat. So gold's reacting a little bit positively. It was down into the 1333 level overnight and this morning, and it's about 1345 today. So reacting positively while the dollar's flat.
Nice little dip and then a bounce, and the dollar did break below 89. So even though we haven't seen a lot of price action, we have seen that significant barrier of dropping below 89. Doesn't want to stay there. It keeps popping back up over, but definitely still showing some weakness.
Yeah, and following the Fed announcement today, Wednesday, we had quite a bit of action right around the announcement notes getting released. Then we had the dollar come down into a short-term support level, built off some pricing last week. So I wouldn't be surprised to see if gold does continue back up into that 1360s. I still think we're climbing at least up to Robert's 1375 he talked about a couple weeks ago before we see any major thing that looks like a substantial correction back down in gold pricing, if that does even end up happening.
What do you think on silver today, Miles? We haven't seen any narrowing or changing in the gold-silver ratio.
No, and silver's been compressing down since about May of last year. So as long as we stay within that channel, I think silver is still a ways out from its breakout. You know, silver is the thing that reacts to the emotion of the market. So as people tend to drive into the metals market, as they have been over the last couple of years, obviously China has, as the American public starts getting involved in the precious metals market, a lot of the American public will turn to silver, seeing the cheaper price and the better deal.
I think it'll accelerate too if President Trump is successful in getting this infrastructure spending package passed, as he extended the offer to reach across the aisle and work with both parties last night. I really do see that being a 2018 come to fruition type of an event. What about the other white metals?
Yeah, I completely agree, Tori. I think any of the white metals or anything that has an industrial usage should look pretty strong. I think that includes platinum, and hopefully platinum better than palladium. You know, platinum's continued to climb. At least in the last week, it stayed pretty stagnant. Palladium, however, is off about 9.5%. Now, we're not calling for palladium to tank by any means, but we have been for the last couple months here calling for platinum to start playing catch-up, just like we've been talking about silver playing catch-up against gold. So I definitely foresee palladium, after hitting those all-time or near all-time highs after capping out at around 1100, I see platinum starting to play catch-up like we've been talking about.
Robert, is this the week that we actually see it hit 1-to-1? I mean, we're close. We're 0.88, 0.9, 0.92, now 0.94 or 5. What do you think? I mean, is this unrestrained correction here between the ratios?
Yeah, it is historic with platinum below the price of palladium, and we've looked at a chart where only 4% of the time that has ever occurred with these two metals since they were discovered as separate metals in, I think, 1968. So since 1968, you've only had 4% of the time where this has happened. So pretty extreme on a ratio basis, meaning one against the other. And so I'd be moving from palladium to platinum. If you haven't already done that, we can walk you through the process.
I totally agree. And palladium being priced higher than platinum, again, in that 40-year chart, less than 4% of the time. Let what Robert said sink in. There are a few ways that ratios correct. Okay, we don't care about the spot price. We're not wishing for palladium to decline, as Miles said. What we're projecting is that platinum will outperform palladium here in the coming years. So you want to be on the right side of the fence, right? So there's a few ways that ratios tighten. Either one is outpacing the other as they both climb, or one is outpacing the other as they both decline, okay? Or they're meeting in the middle as one climbs and one declines. Either way, you want to be on the right side of the fence, because even in a declining market, you want to be in the one that's declining less rapidly and narrowing that gap. And that's when we make the switch from one metal to the other.
It should be noted with the ratios that you're talking about, Tori, that it's best used within an IRA. The IRA structure being tax deferred, you get to take all of the ounces from one side when you're ready to get on the other side of the fence, such as now going from palladium to platinum. When you do that, you take every bit of your metal and move it over to the other one. Instead of, if you were outside the IRA, you'd have to pay taxes.
And it's also the key with getting set up properly on the front side. You know, you're disappointed that you didn't have palladium with which to switch into platinum, but now is the time to own platinum. So start now, acquire some platinum in your portfolio, even if you're moving a little gold or a little silver over.
Yet now is the time before April where you can make actually 2 contributions to an IRA. You can still contribute for tax year 2017 until April, and then you can also write a check for 2018 now if you have the ability to do that. The reason I would do that is because metals are going to go up. So if you're looking at contributing to the IRA for 18, do it now while the prices are down so that you catch the benefit of the prices rising.
So rounding out our chart section, let's jump quickly back to the US dollar. As we did break sub 89, we got all the way down to 88.44. If you watched our show last week, we had a target at around 88.23. The scary thing is if we break below this level, which I think we could, especially following on the heels of the State of the Union address, which we'll talk about here in a second, and the expectation of infrastructure spending here in the U.S. while they lower taxes, all the things that we've been talking about the last couple weeks, the assumption that the U.S. dollar continues to get weaker, we don't really have a stopping point on the charts till we get sub 85. And I know a number of people, I've read a few articles talking about $84, $85 coming up in the near future. So we could see a substantially weakening dollar from the highs we had at the beginning this time last year. 104 down to 85. What do you think?
That's huge. And again, as we pointed out last week, gold is countering that move. That is why you diversify. That's why you spread your portfolio amongst various asset classes between equities, tangible precious metals, and U.S. dollars.
I don't really like equities now, but yeah, okay.
Well, you know, they continue to climb. We had a huge down day yesterday, and they have rebounded because of the State of the Union address, Miles, as you point out. And certainly that rally can actually continue if you do get your infrastructure spending, right? And so just a handful of companies can move an entire index. And we're seeing that today with Boeing, for example. So I'm not saying that the stock market rally is going to end this week, but you have to measure the upside potential versus the downside. And the general consensus out there, even if it be subjective rather than objective, is that we really are on the verge of a strong downturn. And that is why you diversify your portfolio. You shouldn't try to time pulling everything out of one category and putting it all into another. Never what we've recommended. We're saying try to balance your portfolio amongst a variety of classes.
And I say I don't like equities. It's just because I don't like them with high values like they are, because I like probability. And I'd say the probability going forward in the next few years is that you might end up with losses if you just held on to equities. But in the short term, sure, play the game. Just be ready to jump off the ship.
Sure, compare the equities, which are at almost all-time high PE ratios. In fact, PE ratios that have never been seen before without having a substantial following decline in the equity market. So compare that at a substantially overpriced level to, say, what we talked about a second ago, the platinum-palladium ratio, which is only 4% of its entire existence been at these prices. So would you rather have a 96% chance of making a ton of money or an almost 0% chance of making a bunch of money?
That was rhetorical, right? I mean, we all know the answer.
Well, maybe rhetorical, of course, in this room and to all of our listeners, but popular opinion around the country is keep driving money into the equities market. You know, Bitcoin's 20,000, I bet it'll go to 25. Stock market's 25,000, maybe it goes to 30. That's not always the case.
No, good point, Miles. And, you know, we don't want to close the show without mentioning that Bitcoin's back down below 10,000. In fact, 10,000 off of its high. And the metals continue to do what they've always done. And following gold, it's in a 6-week uptrend. We'll see how that continues. Fed, again, no real news today. However, Greenspan, the prior Fed chair, says, look, we're on an unsustainable fiscal and economic path. That's big news. The Nunez memo released this week should move the markets. And so I'm very fascinated to see what ends up playing out there.
And Robert, this time of year, I definitely think you're very right about IRAs.
Thanks. That is your opportunity to not only buy metals at a lower price, but to get more money into your retirement account. We'd love to chat with you, so give us a call at 800-525-9556.
And as always, if you like what you heard, please click that subscribe button, ring the bell to get your YouTube notifications. Give us a thumbs up. Engage in the comments. Head on over to Twitter at ICA Gold, or you can always go to our website, McAlvanyICA.com. Thanks for listening.
Have a great week.